What's up, guys? It's Rob here, and we need to talk about Vinco Ventures, ticker symbol BBIG, because this stock is actually suffering a bit today, but that's not to be unexpected necessarily because the whole market is going down. So let's take a look at the chart and see what's going on with BBIG. You can actually see that just last Friday, right, just a couple of days ago before the weekend, we ended up breaking this key support level of $8. And if you look back at the past, this has been a fairly important support level for us, right? Over the past couple of days, especially mostly last week, we were hitting $8 and hoping to bounce past it. And we ended up bouncing around to 9, which actually pushed us down and has led to this crash all the way down to the new support level that we've used in the past, $7 right here. You can see we bounced off of it just earlier today. We were bouncing off of $7 around market open. We dipped below and then rebounded quite a bit in a very strong way. And this is actually a very good pattern that I like to see because if you look back at the past, if you look back over the past 30 days, you can see that $7 has acted as a pretty important support level for us and has actually led to some significant rallies. So let's take a look here. You can see that after our first really big rally on BBIG, where we went from $3 all the way to 10, we ended up dipping down, hitting 7, not being able to break through it that following day. And then the next day, we ended up dipping down below it, but couldn't hold below 7 and rallied up, made new highs. Then we continued on, bounced off of 7 again, eventually made even higher highs of 12.50, 12.49. And since then, we've been dipping down, and this is our most recent hit of $7. So this is a very significant support level for this stock, okay? It's really led to a lot of big rallies and has stopped a bunch of big crashes for this stock. So what I think about this is that it's very likely that if we end up breaking it, we will be moving down in a big way. However, it looks like there is some very significant buying pressure at the $7 level because that managed to shoot us up almost $1, right? When we hit $6.95, we shot up almost to $7.95. We couldn't quite get there, but really that was very significant for me to see that we have a lot of buying pressure at this $7 level, and that when we hit it, we end up bouncing up in a big way. So that's good to see for the overall short squeeze. Now, if we do dip below 7, doesn't necessarily mean that the squeeze is over, but it seems a lot less likely, in my opinion, if we end up dipping below. However, it doesn't seem like that's going to be the case. Obviously, we'll have to watch the chart the rest of the day to see what happens with it, but I would really like to see us making a bit of a rebound and getting back above this $8 level, because that's really where we've been at for the past while, and has identified itself as a very strong support level for us. So it would be very good for the overall short squeeze if we could get above $8. Now, of course, it's going to be tough to do today. If you look at the overall markets, we are really trending downwards. This is SPY, tracks the overall market essentially. And if you look at the yearly chart, you can actually see this massive tip that we just had. After Friday, we just shot down over the weekend. And so obviously traders are moving to a more risk-off position. If you look, the dollar is up a bit. On Friday, it moved up quite a bit, and we were not actually, we're not necessarily as high as we were earlier today. We are dipping down a bit. Maybe some investors are moving their money out of dollars and into stocks and other kinds of assets. But we were at least, even still, we are up a little bit on the dollar on the day. So that is something notable. But BBIG does have a significant support level. So even if we continue trending down with the overall markets and the dollar continues trending up, I do think that we'll probably be bouncing off of this level because it has been so strong for us in the past. You can see we haven't really been able to break past it for any significant amount of time other than this one day when we ended up rallying very hard at the end of the day after breaking down. So really, this could act almost as a buoy does in the water, right? If we end up dipping below, it could act as a buoy, and then we might end up shooting back up. So that's a real possibility, but I would not like to see us breaking 7. Rather, I would like to see us making higher lows, essentially just not getting as low. And that would be the case, right? Because we were making lows of around 552 here, of around 685 here, and then 695 here. Obviously, that's not that much higher of a low, but it would be something, and it would be contributing to the overall bullish pattern that I think we're seeing with BBIG. Now, we do have to see some upwards movement soon if we want to see a short squeeze, because shorts are actually doubling down. If you look at Ortex, you can see that the short interest change is up 8.31%, and that is fairly significant. Okay, shorts are really doubling down on their position. They only have a 22% short interest as a percentage of the free float, so it's not the biggest short position that institutions have taken. Obviously, we've seen some that have been much higher in the 60s, 70s, 80s, 90 percentiles. Especially, SPRT investors know this, that even if you have like a 97% short interest as a percentage of the free float, that doesn't necessarily mean you're going to see a squeeze. What you need to see with a squeeze, if you want to squeeze, is massive momentum in an upwards direction, because that's what actually forces shorts out of their position. Now, if you multiply the shorted shares, there are only 16.7 million shorted shares multiplied by the price. We're going to try and do some quick math. It seems like that's around $110 million, somewhere around there. So, that's not the most significant amount of money for institutions to have vested in this short position. So we really would need to see a pretty significant rise in stock price before that amount of money actually becomes a significant amount of their portfolio. Significant enough, at least, to cause some margin calls and to cause them to actually have to cover their position, because institutions do not want to cover their short positions on this stock when they're losing money. They want to actually double down, as you're seeing today. They are increasing their short position. They want to be shorting shares when they think that the price is inflated. And to be fair, looking at the long term, maybe the price is a little bit inflated fundamentally. Obviously, when this thing does come crashing down, hopefully it will have risen a much more before it does. But obviously, when it does come crashing down, there are some shorts who are going to be shorting it on its way down, who will be making money. So, whether that's happening right now or if it's going to happen in a couple of weeks from now after we've seen an even bigger squeeze is, we've yet to find out. But obviously, some of the shorts who are shorting today think that today and, the next couple of days will be bad days for BBIG. They think that it'll be moving down. We'll have to see if they're correct. Now, there are some other catalysts that could be moving BBIG. First of all, we just had a bunch of options execute last Friday. That was the September 17th strike date. And you can see for these other strike dates, the weekly strike dates, there are some significant options, some call options that are open interest, right? There are some significant numbers over here, a couple thousand for a lot of these strike prices. But what's more significant than that is the October 15th monthly call option open interest strike dates, right? So you can see that we actually have 25,000 open interest call options at $7.50, 19,000 at $9, 34,000 at $10, 14,000 at $11. And this goes all the way, there's 36,000 at $20. So there really are quite a few open interest call options that could cause an actual gamma squeeze on this stock if we start getting some upward momentum, because in order for institutions to need to cover their open interest call options, right? They've likely sold a bunch of these call options. In order for them to need to cover, we need to see the price moving up. And essentially, for a lot of these strike dates to start becoming in the money, right? If we can get this $7.5 strike date or strike price in the money, or this 35,000, if we can get these 4,000 open interest call options in the money at $10, then that would be very significant share count wise for how many shares institutions would have to buy up. Because my guess is, looking at the short interest percent of free float and the current short interest change, not a lot of institutions are holding shares of BBIG. They're probably mostly shorting them. And that means that they're basically in the red twice, right? If this thing starts moving up, they're down because of the call options, and they have to cover for those, and they're down because of the short interest, and they'll potentially have to cover for that. That's probably the last thing that they'll want to cover. The call options actually have put more pressure on them to cover, because there's an actual date by which they have to have those shares to hand out to investors. So it's more likely, in my opinion, that they'll be covering for the call options than they would for the short position. However, what you have to note about BBIG, if you look at Google Trends, this is the blue line. Over the past 7 days, we've been tracking BBIG on Google. And you can see that there is some waning interest. Each day we're making lower highs, search volume-wise, for BBIG. And this is somewhat bearish, right? I would like to see, ideally, BBIG increasing in search volume. And obviously, this is correlating with a decrease in price. And as a stock is decreasing in price, fewer and fewer people are interested in it. People want profits now. They're looking at other opportunities. And it's very possible that, if we do see a bit of a pump, especially today, which I think there is a real catalyst for, right? This bounce off of $7 could lead to a significant pump in BBIG's price, potentially at least. We could see a rebound in their search volume. We could see a lot more people searching for this stock, and that would be very good for the stock overall, because institutions are not buying this thing. They're shorting this thing, and we need retail investors to come in and buy it. So that's really what we're looking at with BBIG. I think that we do have a good bull case for it, but there is also the worry of a bear case, where if we do break below $7, that would be very bad for this stock. And although we saw some significant support there, that doesn't mean that we're not going to have some massive shorts coming in, especially later today. You can see they are very rampant with the shorting, 8.1% increase in the short interest. And this is only at 22% as a percentage of the free float. So it's not the highest short interest. Institutions probably aren't scared to be shorting more. Obviously, they're not. As you can see, we increased by 8% today. There is a real chance that people will be shorting this and pushing us below $7. And if that happens, I think a lot of investors will lose their conviction in the stock, and that would be very unfortunate. That would probably lead to some non-shorting selling, right? People would be just dropping their shares because they saw this thing breaking a very key support level that we haven't really been past. I mean, obviously, we were past it for only part of a day, and we rebounded very strongly on massive volume. But that might not be the case if it happens again. We'll just have to see. So that's what I have for you guys today on BBIG. If you enjoyed the video, feel free to like the video and subscribe to the channel. And something else you can do if you'd like to support the channel and get paid at the same time is there's a Webull referral link in the description. You can use it to get free stocks. All you have to do is click the link, make an account, and you get a free stock. You don't have to deposit any money or anything to get that free stock. If you deposit $5, then you get a second free stock. So that's what you can do if you want free stocks valued up to $2,300. It's a great deal. Other than that, guys, have a great day. I'll see you in the next one. Bye.